Okay, well, hello everyone. My name is Brenton, and welcome to another episode of Wilson Weekly. We're joined here again today by the fantastic Doc Wilson, who's got some very important key updates on how the market's been tracking over the past week. So, what's been happening, Doc?
Well, hi, Brenton, and good to chat again. Of course, we're providing what we do, all the latest data over the last week. We are in the middle of winter, so, have we pushed the snooze button? I'm not sure, but this is the period typically in our housing market seasons where we do move into that sort of hiatus, school holidays, and the autumn selling season's come and gone, and it was a strong season. And what we see now is a lot of kitchen table conversations, perhaps, about are we going to buy, are we going to sell before Christmas? And that leads to the generation of the spring selling season. But we've got a bit of a way to go before we get there. So middle of July through to August is typically slower, fewer buyers in the market. And what we do see is the proportion of higher priced properties tends to be a lot lower. So we have more of those non-discretionary sales occurring in the market. And that means that puts a little bit of downward pressure on prices, but that's because of the change in the price mix. But that's winter for you. But we've still got some very interesting data. And as usual, we finish off with the auction data, which it's been holding up really for this time of the year. And it's been like, hey, where's the cooling off of the midwinter market been? But it's here now, but still performing well ahead of where it was a year ago. So plenty of energy in the marketplace. So I guess it's time to get going and we'll look at all the latest data. And of course, it's brought to you by My Housing Market along with Infinity. And we're all about the current state and future prospects of your housing market. And of course, that's what you want to know is what's happening here and now. So we put together all those jigsaw puzzles to come up with an insight into the housing market and its prospects going forward. So it is the week ending Wednesday, July the 17th. So we are dead set in the middle of winter, right in the middle of July. And as I said, a lot of our capital cities are experiencing their typical midwinter weather. But up here in Queensland, it's fine and sunny, but pretty cold with that bitterly westerly blowing. So this week, we're going to look at house building costs. That's always important to keep track of house building costs, not just in the sense of how much it's going to cost to build your house, but it is a significant contributor to the inflation rate. In fact, the CPI and housing costs, are a key to the basket of goods that the ABS track and measure to give us the inflation rate. And of course, inflation is important because it's all about interest rates. We've had high inflation, which has resulted in higher interest rates. The chat now is, have we beaten inflation? Will we start to see maybe even cuts to interest rates? Not sure about that, but certainly, even though we have seen some higher inflation results over previous months, we look to maybe be getting control over inflation, but still think there's some way to go. But house building costs are important because those housing costs, which have been a significant contributor to the rise in inflation, are made up of rents, and we know rents have been going through the roof for a while now, and house building costs, not apartment building costs, but house building costs. So they're the two key components that the ABS use in determining housing costs. And of course, that works its way into the CPI. And of course, that's the key conversation that the Reserve Bank has when they're discussing the prospect for interest rates. So we'll look at the latest My Housing Market House Building Cost Index. We're also going to look at regional house prices. We've seen the capital city results over the last couple of weeks for June. So let's get an update on the major regional housing market activity in terms of house prices. We'll also put together our latest rent report and house price report and come up with the investment returns for residential investors. So we're going to look at gross yields. And of course, a gross yield is a measure of what you get for the rent versus what the value of the property is. So it's a gross because, of course, it's just an overall valuation. It doesn't take into account, local costs, individual costs, rates, agent costs, mortgage costs, these sort of things, they're up to the individual. But these are overriding measures of gross returns, gross yields. And it's a very good forward indicator of potential growth in markets, which we'll explain when we see the slides. But we put that together with so that's the return on your investment from rental income. But we also look at we put that together with the capital growth. So it's the return over a year on the current rent and the current valuation. And we add to that for total investment returns, the capital growth that you've had on the property. And of course, this is just aggregated data. So it just covers capital cities and it differentiates itself from, local properties. So, but it's very interesting to see just where the top returns are coming from in terms of those gross yields and annual capital growth. And as usual, we'll finish off looking at the latest weekend auction results. Very good forward indicator, as we continuously say here, of what's happening generally in the housing market. And as I mentioned at the beginning, we are starting to see what we really expected for the last few weeks, that last few weekends are cooling off in the market, but it still remains pretty good for this time of the year. So if I could continue with the weather analogies, the heat analogies, the cold, it's still pretty hot in our weekend auction market. So let's get started and have a look at house building costs. And they did increase. It's a little bit of a disappointment because we have seen, this is the My Housing Market House Building Cost Index. So this measures, it's derived from ABS building approvals data. That's values and numbers. So that gives us a value, an average cost for those building approvals. And it's because it's real-time data in the sense that these are approvals, it tracks the costs of building that are presented to the ABS by builders. So in terms of the numbers and the values being measured as an individual item to give you that individual value. So that index, you can see through COVID skyrocketed. The reason behind that was the previous government's home builder policy. Of course, that released a lot of demand, brought a lot of demand forward, some very generous incentives to build a new house according to that policy. But unfortunately, all that demand that was generated from that policy, and look, no complaints, it was needed through COVID. We didn't know where we were going, but we just didn't have the building materials or the labour to cover all that demand. So, of course, law of supply and demand, costs went through the roof. And you can see that there, just how quickly those costs rose. And, of course, that worked its way into inflation, as I mentioned before, because it's a key part of the housing cost measure of the ABS. Now we've just started to see, so this is measuring quarter by quarter results. So we're measuring the quarterly building costs, average building costs, and we take it forward quarter by quarter. And we have just started to see that an easing in the trend for house building costs up until this month, and it's just sort of gone back a little bit, which is a concern. But you can see the rise there, and we can see, okay, well, we've sort of steadied the ship in terms of the rate of growth from quarter to quarter. But if we look at the big picture there, we can see that since COVID, or since that breakout in house building costs through that previous government's policy, we've actually seen a building cost rise by 46.6%. So you're actually paying 46.6% more to build a house than you were at that COVID period in 2021 when that policy was introduced. So that's sort of an average of 15% per year increase in house building costs. And you can see prior to COVID, it was pretty flat, those increases in house prices. House costs, building costs, but it really did go through the roof, literally, through that policy. So, look, it's looking better, or was looking better, a little bit of a hiccup with rising house building costs again, and maybe reflects what we've seen as a little bit of an uptick in building approvals for houses recently. So, I think
just
even though, Yep.
Sorry, mate. Just on that one, is there anything to indicate that these prices could actually continue to go up?
Well, look, this is the issue. I mean, we've sort of had two things working in terms of improving the costs, and that is we've had the satisfaction of all that demand that went through the system in relation to the policy. So a lot of that's been satisfied, but there's still strong demand for housing out there because of migration. Of course, we've had over 500,000 net migration come into Australia last year. Of course, they've got to live somewhere. So that's sort of a rebalancing or offsetting the change in demand from that home builder policy. But the other thing is that we were hoping that a lot of that migration would provide the tradespeople, etc., to be able to push down prices growth, with demand still reasonably high. But that sort of hasn't occurred either. Now, if that might be a question of are we targeting the right type of skills in terms of our migrants coming in, to offset these labour shortages, particularly in the house building industry. But yeah, look, it was still rising, and we're still sort of well ahead of where we were over May last year. You can see there 144.9 on the index versus 148.8. So yeah, it's looking better, but I don't think we're out of the woods in terms of we're still paying high cost. We're still having to cover high costs for home building. That is a constraint to building approvals, of course, for houses, because builders, even though they may be getting more approvals, are still perhaps struggling to turn those approvals into commencements, because they have to make a profit, and if building costs are high, that makes that a little bit more problematic. Not out of the woods yet, and a little bit of a change with that uptick, which will unfortunately work its way into the inflation rate, which has been rising over recent months, and we're looking for some relief. And this is not giving us a sign of relief to what is an important factor, and that's housing costs, because we know rents are still pretty high, and house building costs have risen again. So when we talk about the impact on the inflation rate, this is the change over the year for the quarterly set here. So we can see there that at its peak, that actual house building costs over a year rose by 23.3%. We saw before it was nearly 50% over 3 years, but at its peak over a year with an yearly rate, it was at 23%. Now we've dropped down, which is good. You can see that annual rate is falling. That has helped push the inflation rate down, but and we're down now at just 3.3%. I say just, it's still high compared to the pre-COVID levels, but we didn't really make any improvement, which reflects on that increase in the actual index over the May quarter compared to the April quarter. So house building costs have increased by 3.3% over the past year, which is the same result we had over April. So yeah, probably not as good a news. The trend had been falling, which was good for inflation as well as good, of course, for building, but just held up a little bit over May. So we need to keep a watch out for that. And I guess, again, it's just, that the demand is still probably significant enough not to be able to we're still finding issues with materials and labour for building. Now, this month, we're going to actually have a look at what's happening in the capital cities in terms of their house building costs. I think that's interesting. We can relate it more to a local level rather than the national level, which, of course, is important for inflation. But this is about, I guess, locals, wondering about what their prospects are for house building costs if they're looking to build a new home. So over the past year, Sydney, has been very strong in terms of its growth in house building costs, strongest of all the capitals, the major capitals, up by 6.4%. The monthly, this is the quarterly month based on the previous quarter, can be a little more volatile, but still we're not seeing any real relief there. Perhaps Melbourne, with house building costs up by just 0.8% over the May quarter compared to the April quarter. And maybe that's, again, part of the reason why Melbourne hasn't had the sort of springboard of housing market activity over the past year or two that the other capitals had, because they're a better supply line. And we see that, when we look at the building approvals, because Melbourne typically provides 40% of all of the capital city dwelling building approvals. So again, they're not as constrained, particularly over the last quarter, with house price growth, the best performer there, and that's a good number, 0.8%. The lower the better. But the other capitals are still sort of steaming along, particularly Sydney there, with building costs up by 6.4%. Remember, the national result was 3.3%. So Sydney's rising at double the national result. It's also interesting, we create an index here on the actual average value or the average cost to build a house. So when we create an index with Sydney situated at 100, we can then compare the other capitals in terms of their average house building costs. So Sydney's tracking nearly 25% higher than Melbourne in terms of building costs. So not only is it costs rising faster than anywhere else in Sydney, but also the highest by far house building costs. Like I said, 25%, nearly higher than Melbourne, and significantly higher than the other capitals. And you can see there the difference in the cost to build a house in Adelaide and Perth compared to Sydney. It's 40% more expensive to build in Sydney. And this isn't talking about the value of the land. This is just the value of the inputs that the builders are asked to measure, and also the profit margins. So Sydney's still, not just with prices, but also with house building costs, well and truly ahead of the rest. So that's house building costs. Sort of bad news in a way, but not so bad news, but certainly not really good news going forward for house building costs. So let's watch out next month to see how that's tracking. So home investment returns. Let's look at the latest data, which looks at the June quarter rents. It's the June monthly rents versus the June quarter taken over the month house prices. And so we'll look at unit prices. So we'll look at the returns. Firstly, we look at, as I mentioned, gross investment yields for houses. So what this is doing is it's taking what we have as the median asking rent for each of the capitals, the latest median asking rent. Then we're multiplying that by 52, because that gives us the return over a year of that weekly rent. And then we divide it into the current median asking price. So that gives us what we're getting back from the notional valuation of the capital city the capital city sales price. And that gives us a measure of a return. And these are the returns. As I said, it's a gross return, so it's not including costs to the investor, local costs to the investor, individual costs. It's just the overall aggregation, there's a good word, of rents and prices, and coming up with the return on investment. So down a little bit, the return for Perth, reflecting higher prices. And these are houses which typically have lower returns than units. But Perth, we know that's the strongest housing market at the moment. Results there just under 4% return for a house, gross annual yield for a house, followed by Brisbane, Adelaide, Melbourne, and as usual, Sydney, the underperformer, reflecting how much higher house prices are in Sydney compared to the other capital cities. So a little bit of a shift downwards in Perth over the month. And that reflects higher prices, because, of course, as prices rise faster than rents, you're going to get less of a yield, which, is good news for investors, because they're pretty happy to get higher prices as well in a market where there's still plenty of demand. So it's not as though the rentals are falling. They're actually rising strongly in most capital cities still, particularly over the past year. So gross investment yields for houses, Perth the top performer. And similarly, with higher numbers here in the unit market, that Perth is the top performer, nearly 7% return for units in Perth, gross unit investment yields. And that should be over June, not May. 2024 on the graphic, but still good returns there, of course, for investors over 6%, nearly 7%. Brisbane tracking not far behind Perth, 6.1.7%. I think that yield in Brisbane signals that it's actually going to fall. And you know why it's going to fall? Because that's a very high yield, which will attract investors, which it already is, which will put upward pressure on prices, which will pull the yield back. And again, it's good news for investors in that Brisbane unit market because it means capital growth going forward. But the thing with the Brisbane market is it may not see yields fall because rents are rising very strongly for units in Brisbane. So it sort of offsets that. So you're getting the best of all worlds, a yield over 6%, capital growth and rising rents in a market that's, flooded with tenants looking for, prospective tenants looking for what is a chronic shortage of property in Brisbane. Melbourne, 5.4%. I also think that yield in Melbourne is a little bit top heavy. I think we're going to see yields drop a little bit in Melbourne. I think Melbourne, we're already seeing early signs of a revival, particularly in the unit market in Melbourne, particularly in the inner suburban unit market in Melbourne. I'm not talking CBD. I'm talking sort of middle ring, inner ring suburbs where they're certainly seeing rents go up quite sharply in Melbourne recently. And that's what's keeping those yields rising, and those rising yields will certainly attract investors, pushing up prices, and again that will put some downward pressure on yields. But again, it's maybe offset by higher rents. I hope I'm not confusing people out there, but these numbers are a very good forward indicator of where the potential growth is. We always look for sort of disparities in yields, particularly higher yields, because they do signal potential for capital growth. And we've been pretty successful in identifying through this mechanism markets that have grown. We're talking Canberra, we're talking Brisbane, that have had higher yields and have resulted in those high yields translating into growth as investors chase those higher yields relative to what was yielding in other capitals. So Sydney are still good returns there. I mean, these are good returns for investors, 5% for unit investors, their gross yields in markets where there is still upward pressure on rents and prices. So they're sort of keeping each other consolidated at around these levels. So like I said, good results, capital growth, high yields, and sharply undersupplied rental markets. So plenty of demand for rental properties, putting upward pressure on rent. So if we put it all together, so let's look at those yields that we've just analysed or we've tabulated, and we'll add them to what the capital growth is over the past year for each of the capital cities. So these are the capital growth, the capital returns, and when we add that together, look at Perth, will you? So this is your yield for a house, added to the capital growth, and that's 30.8%. So that's pretty good news.
Isn't it?
Perth. Well, that's a big number, isn't it? And we know Perth's had extraordinary growth coming from some way back. We've got to understand that Perth is a value market because it really did nothing for the best part of a decade. At the end of that, mining boom way back in 2012. But it has picked up sharply, and it's certainly a booming market at the moment. And you can see that with the returns, not just the highest yields, but the highest capital growth as well for houses, for prices for houses. So 30.8%, these are big numbers. Of course, it's not a total return per se. It's just putting together the capital growth and the yield to give us a comparison with what's happening in other capitals. Brisbane, good returns there, 22.2%. Again, reflecting what is strong capital growth in Brisbane. Similarly to Adelaide, over 20%. Sydney pushing 10% overall, not too bad. But Melbourne, that underperformer at just 3.12%, which does reflect over the past year that weaker housing market in Melbourne, which we keep saying, and we are, as I said before, getting early signs that there's some pickup potential in that Melbourne market, which has been sort of moving sideways at best over the last couple of years while other markets have been strong. So this is the total returns for units. Look at Perth again, 32.1%. Now we've got to this is obviously a great results for Perth, but we've got to understand the unit market in Perth and Adelaide is very small. So you can tend to get some volatility in prices from period to period. But nonetheless, it is what it is, and they're good returns, and similar to houses in Perth, where units have also been growing very strongly, prices for units. But I think the real standout here is Brisbane, not that far behind Perth. Look at that, 30.67%. Very strong capital growth in units over the past year in Brisbane. And as we know, rents have grown as well, and those yields are high for units over 6%. So, and Brisbane is a significant unit market. It's not a smaller unit market like Perth and Adelaide. It is a significant unit market reflecting all that building that occurred, nearly a decade ago in Brisbane. It wasn't so long ago that we were being told that Brisbane was saturated with units and, it'd be oversupplied for as long as you can mention. But now there's a dead set shortage there, which is pushing up rents and prices. And overall returns for investors are very strong, at 30.67%. Similarly, Adelaide, smaller market, 24.6%. Sydney up 10%, similar to houses, total returns. And Melbourne are better than houses, up 7.7% there. So really does give us an indication of where the strengths are for investors on particular markets. But this is aggregated data, remember, and that, we're not talking perhaps the value that can be recognised in particular suburbs, but we're going to, and areas, but we're going to look at the regional data next, which is exclusive here, of course, the My Housing Market and Infinity. We keep up with the regions on a month-by-month basis, and that can show, if the capital city energy is translating into what's happening in regions, as it typically does. But just before we finish off on returns, I always put this in a bit cheeky. This is looking at the returns of asset classes since the end of 2007, which was the end of a very strong period of economic growth in Australia. So what's happened with house prices since there? Well, Sydney's up 178%, Melbourne 130%. Big returns there, but you can still see Perth, even though it's very strong at the moment, it's only increased by 66.8%. So it's still underperforming, notwithstanding how strong it's been over the past year or two. We've just seen those big returns coming out of the Perth market currently, but maybe it's a bit of catch up there. But hey, check it out when we compare it to the stock market. So since that period, which was a very strong period, the end of 2007 for shares, the All Ords is only increased. Shares have only increased by 17.7%. Wow. Compare that to house price growth, and that's a little bit underwhelming. Particularly, I guess it's sobering for those that have superannuation funds, because, a lot of super reflects what's happening in the share market. But it's not just the share market generally, because when we look at the US share market, that's the US Dow measure there, it's actually outperformed everyone. 188% increase in the Dow, which is the US stock market, in that same time period. And if you had have invested your money in a term deposit, and this is a return on 10 grand on an annual term deposit, so it's turned over every year, so it's compounded annually, $10,000 term deposit, it actually would have increased by 76.1%. So you could have put your money in the bank and got a pretty good return. And that's just till the end of the last annual term, which is the end of last year. So it's even higher now, of course, because we've got higher deposit rates. But nonetheless, I think that's interesting just to see where investment classes are running. And I know there's a lot of, it depends where you start, depends where you finish. And there are lots of, financial implications for investing in shares versus how, all that sort of stuff. But this is not saying anything. This is just giving you a comparison, a baseline comparison over that period of time in investment classes. So let's move to our top regional markets. We've done to death investment. So this is the top local government areas for each of the major states. These are the top areas. We don't have South Australia, Western Australia, because their local government areas are very small. And that means we don't get a reliable data set because of the small size. And there are a lot of them in South Australia and Western Australia for their local government areas. we have to take a longer view of the market to get a reliable snapshot for those states. But the other states, no problems. And this is New South Wales. Wow, look at this. Everywhere except Coffs Harbour up over the past year. And I think this again reinforces the strength of the local capital city market, which of course is Sydney, that sort of works its way through the system. But look at the top performers there, the Tweed and Ballina. Guess where they're adjacent to? They're adjacent to the Gold Coast. And as we'll see in a minute, which has been a boom market over the last couple of years. But the Tweed and Ballina have increased by the most annual prices growth, 18% at the Tweed. And of course, that's next door to the Gold Coast. And Ballina, which is next door to Tweed. Wollongong, also strong. It's probably, I guess we could say, tongue-in-cheek, a suburb of Sydney, not that far away, up by 6.8%, which is similar to what Sydney's produced. And other results starting to ease a little bit, but certainly in the positive there everywhere except Coffs Harbour. And you can see the contrast with Victoria, which we know that Melbourne market hasn't been as strong as the other capitals, and you can see that there's nowhere near the sort of growth or consistency of growth in those Melbourne major local government areas compared to New South Wales, or the Victorian local government areas compared to New South Wales. Top performer there, Shepparton. Not a lot of observations coming through, so that can tend to be volatile, but it is a value destination there, Shepparton, and that's part of the value, I guess, factor in Shepparton has kept its prices rising. Surf Coast picking up at last. Prestige region up by 3.6%. It's been a bit sideways, the Surf Coast in Victoria, but now starting to pick up. Typically a very high demand area, a very tightly held area, the Surf Coast, but it has been tracking sideways and a little down recently, but starting to pick up. And the Macedon Ranges, which is a sort of a rural version of the Surf Coast, also showing growth, but everywhere else not really going anywhere, which is a little bit reflective of what's happening in that Melbourne market. But Greater Shepparton and the Surf Coast, Macedon Ranges, the best performers there, but nothing really to get excited about, and that's what we can sort of say about Melbourne at this stage. And but as I said, I think there are value opportunities reflecting the relative underperformance of the Victorian and Melbourne market. Look at Queensland. So these are the major LGAs in Queensland. Can you believe these numbers? Again, reflecting what we've seen in southeast Queensland is these tremendous results. So it's not just southeast Queensland, it's all the way up the eastern seaboard there. Townsville finally picking up after years of really subdued activity, up by 31.3%, coming from a low base, of course. We've got to say that after a period of underperformance, but up by 31.3%. The Goldie, hey, still chugging along, 21.4% increase in the Gold Coast median house price. Bundaberg value market, 18%. Rockhampton, similarly up 18%. Toowoomba, adjacent to Brisbane, of course, as an LGA, 17.5%. Sunshine Coast, 13.7%. These are big, big numbers. The worst performer there is the Fraser Coast, up by 10.7% over the past year. Incredibly strong market, that Queensland market. And it's not just southeast Queensland. It's, as you can see from that data, it's worked its way all the way up to Townsville. So we also look at Tassie here, which has some major LGAs. Tassie's been perhaps the softest of all our, certainly Hobart and generally Tasmania has been an underperformer over the past year or two. Everywhere else has been growing. But Tasmania tends to be a bit of a non-conformist when prices are rising. Tassie teams, or Hobart, Tasmania tends to go the other way. When prices are down, Tasmania, Hobart tends to go the other direction and upwards. And it is coming from a very strong period of growth in Hobart and Tasmania generally. So a little bit perhaps of a consolidation going forward, but all of the LGAs there down. Clarence and Launceston, not too bad, but Hobart and Glenorchy down. Glenorchy, the worst performer there, down by 9.4%. And Darwin, which is a very seasonal market, up and down, not a big difference there. From month to month, we do see changes between Palmerston and Darwin City itself. And Darwin City down by 4.7% over the past year. And Palmerston just down by 0.2%. So interesting there, particularly the bigger states where you can see the correlation between what's happening in the local capital city compared to what happens regionally. So, but some obvious winners and losers in a sense there, or some opportunities with some of those regional markets. But gee whiz, that's just extraordinary, though. Queensland LGA data right across the board, very,
Some
very
big
strong.
figures there, hey, Doc?
Absolutely. And in markets where have been underperforming, like Townsville, over a number of years. And it's good to see Townsville back in town, because it is a major market, a major economy that really has gone sideways and backwards over the past 5 or 6 years. I used to go up to Townsville quite a lot, and it used to track Cairns. That was the relationship between Cairns and Townsville, but it's still $100,000 more expensive in Cairns than it is in Townsville. So
good to see Queensland.
Way to go, perhaps.
So I was just going to say, it's good to see Queensland finally on that rebound. I feel like it was significantly undervalued for a very long time there, and COVID's almost just brought it on quicker, if you might say.
Yeah, and that was that sort of migration out of the southern states, the safe haven sort of perception. But the interesting thing is that the Brisbane raw median, not the adjusted median, but the raw median, which it can be volatile from season to season, is now ahead of the Melbourne raw median. So Brisbane's, on one measure, is more expensive than Melbourne to buy. That's for a house, So just shows you how that Brisbane market has grown going forward.
Even after COVID, right? COVID sort of
that's right.
slowed,
and that's the point. Yeah, absolutely. And that's what we've seen, that the market has continued to grow over the last 12 months, and this year strongly. And we're at the end of that sort of migration surge, which has really worked its way. But we're still getting net migration coming into Queensland. So maybe people have just sort of thought, well, it's the place to be at the moment, and it's sort of continuing. That demand is continuing. And I know down on the Gold Coast, there's huge development going on for apartments particularly, and houses, because of such demand is there,
well, that's it. Yeah.
Through.
I'm in that Tweed region that you indicated there. I live there, and the days on markets for properties is just insane at the moment. 23, 24 days on market and it's gone. Two open homes and it's sold.
That's
so
right.
It's still going very strong.
Yeah, just a couple of opens and that's it. You're gone. But like you say, it's been perhaps a little undervalued for a while, given its positives. Its lifestyle, its climate, and its economies. Certainly now chugging along. Plenty of infrastructure work happening, and that's of course not to mention the Olympic Games coming there in a decade. So still continuing to to really produce some outstanding results, but all the way up to Cairns, a double-figure growth there. Every one of those LGAs has reported double-figure growth. Even the sort of the sleepers over the last few years, lower price, Rockhampton, Bundaberg, Townsville, and Mackay have all really reflected a lot of demand and higher prices, over the past year. And it's so different to the other LGA. So let's have a look at the latest weekend auction results. We gave a little bit of a preview of that at the beginning of the show. Starting to see some cooling off, which we expect. Fewer buyers, of course, lots of distractions. School holidays still in New South Wales. And people are like, a lot of demand's gone out the door through autumn. And we get more discretionary sales, people who are moving interstate, divorce, death, these sort of things during the middle of the year. Then we have non-discretionary sales, because people typically work towards an autumn or a spring campaign, which means they've either made their decision at the beginning of the year to get into the market, and then that's all dissipated and worked its way through to winter. And then they all start talking about, hey, let's get a house or sell our house before Christmas. And that creates the spring selling season. So that's all happening now. Lots of conversations about, hey, let's get that house or that unit or whatever done by the end of the year. And that creates the spring selling season. So we are in the middle of the year. This is usually that sort of quieter period. And we're starting to see that now. Fewer buyers, lower clearance rates, but the number of listings is still very high compared to a year ago at the same time. And it's just still not really a typical midwinter market. By grace of the listings, And even with higher listings, the clearance rates aren't too bad, really going forward. So we'll see what happens over the next.
Just on that one, Doc, I think CoreLogic might have put out a report saying that the downloads for the CMAs is significantly higher now. So that could indicate we're maybe going into a really strong spring season as well. Just people are having those conversations now.
Well, it's a question of whether a lot of the listing activity we've seen this year, and we've seen record listings over this year so far compared to the same period in other years, whether that's sort of run its course. But because that's part of the cycle, we see buyers coming into the market following a weaker market. And of course, we had that when rates rose in 2022. Buyers came back into the market because prices were around about 10% lower. We always see that. And then once the market consolidates, recovers what it lost in the downturn, which it did last year, plus some, then the sellers come back into the market. And that's what we've seen this year, the back end of the cycle. Sellers are coming in because they don't come in early because they've got too much, they've got too much skin in the game, with their property. They don't want to be losing money. But we've seen them coming into the market, no doubt about it, this year. And clearance rates and prices have held up. So it sort of puts pay to a lot of that nonsense that, so-called commentators spoke about, that it was a lack of listings that was pushing prices up last year. Now we've got record listings and prices are still rising. It's sort of a question of the cycle. It's not just a static sort of supply and demand measure going forward. So let's have a look at the results. Sydney, 581 auctions, lower, of course, than the weekend before because school holidays in New South Wales and the winter market. But when you look at a year ago, still tracking reasonably ahead of a year ago, the Sydney market in terms of auction numbers. Good clearance rate in Sydney, 70.2% in a holiday market. And not too far away from where it was a year ago, which was a strong part of the market, just the end part of what was a very strong market, as I said, driven by those buyers. Melbourne numbers up a little bit compared to the previous weekend. School holidays over in Melbourne. The clearance rate was higher in Melbourne. We're still getting these early signs in Melbourne that it's just thinking about picking up, really picking up. And again, some more positives there. That's not a bad result, 67% for sellers. Which is nearly 7 out of 10 properties selling under the hammer on a weekend, and again well ahead of a year ago, 535, but the clearance rate well behind a year ago, which was Melbourne's sort of peak of the market a year ago. Brisbane, similar numbers to the weekend before. Clearance rate down a little bit in Brisbane, but we always mention this. The Brisbane clearance rate is like a little bit atypical because they have a different sort of marketing attitude up there. It's like the auction is the entree to the private sale, and it's sort of it passed in, but we didn't want it to sell because we wanted to go to private sale sort of thing. But it doesn't reflect as it does with the other capitals underlying price energy. So a little bit down, but similar to a year ago in Brisbane, 49.2. But look at the listing difference: 46 last year, 107 this year. So big numbers in Brisbane. Adelaide keeps on keeping on, 84 listings, a little bit down from the weekend before, but higher than the year before. And clearance rates a little bit lower, but Adelaide remains the strongest auction market through winter and really consistently in other periods as well. And 75.1% is a good result. Canberra, well, we've been talking that Canberra market up now for a while. In fact, we had 3 weekends in a row above 60% in Canberra, which was really good. And we've been saying it's a value market. It's sort of disengaged from Sydney, which it usually tracks, but it sort of came back to normal with a thud last weekend, just over 50% clearance rate, well below the weekend before, but higher than the same time last year. So maybe some seasonal effects there with school holidays in Canberra. So we need to have a few more weekends when it's completely normalised, although it will be winter, to see if that Canberra market is finally picking up again. So these are the results. Sydney tracking. These are the overall monthly results in the month to date. Sydney, certainly still good results there for vendors in Sydney. These numbers would continue to indicate higher prices in Sydney, around about where it was at the same time last year. Melbourne down, we saw that. You can see how the Melbourne market really shifted downwards towards the end of last year, but has held up over the past few months, and I think that's a positive side for Melbourne. still tracking in the mid-60s. So maybe a springboard there for some springtime growth, right? Springboard to springtime growth in activity in Melbourne. Brisbane down a little bit. Very strong market a year ago in Brisbane. That was the peak of that surge out of the southern states we spoke about. Massive record clearance rates in Brisbane, over 60%, 70%, 80%. We've never seen that before in Brisbane, but that was just a reflection of the huge demand for property, that everything was going under the hammer. But back to normal in Brisbane now with those results, but still generating price growth. And Adelaide's still the strongest on the clearance rates, a little bit lower than a year ago, but again, that was a very strong period in the market. And Canberra, yeah, just thinking about getting back to where it was a year ago until it sort of disengaged a little bit. So we'll wait the next few weekends results once school holidays return. So if you want those, the latest auction results, get onto my LinkedIn, channel. Every Saturday night at 6:30, you'll get the latest capital city results, and there's the full national report every Sunday at around about 9 o'clock, which includes the regional breakdowns for both Sydney and Melbourne, and the top 10 sales under the hammer for each of the capital cities. At my LinkedIn, Doc Andrew Wilson at LinkedIn. I mentioned record sales listings activity, and that's translated into record sales. So we can see there, this is the number of properties sold under the hammer. So this isn't listings, this isn't clearance rates. It's putting them both together. You can see that Sydney sales, auction sales over the first 5 months to date are up 32.8% compared to the same period last year. Melbourne up 24%, Brisbane up 20%, Adelaide up 13%, and Canberra up 4%. So even though we're seeing record listings, we're also seeing record sales. So a very strong part of the market. And we like to produce, and we do on our own, produce sales as well as listings and clearance rates. And that gives you a feel of actually what's selling under the market, under the hammer, particularly compared to the same period on period, because that takes the seasonality out of the measure. So if you want a copy of the latest National Weekend Auction Market Report, there is a QR code. You can take a picture of that. That will give you the latest My Housing Market Weekend Auction Report. Now we're going to finish off here, as we usually do, with the Infinity My Housing Market Suburb Data app. If you're looking to find out what's happening in individual suburbs, here's a great little app that you can get. You can get it through Infinity, but you have to get a password, and there are some conditions to getting that password, all right? But it's a great app. Get hold of it, because it'll tell you what's happening on a suburb basis right throughout Australia, every suburb that has data. So that's the QR code for that app. And it looks at the asking prices and asking rents for every suburb in real time. And you get that with the filters there that we can see. So you can filter it for price or rent. So it's either price or rent. So we've got a screenshot here of price. We're looking at, we can filter it for the state, outside capital city regions, or the capital city region. So we're looking here at the capital city region for New South Wales, Sydney. We've filtered that for suburb Blacktown. So it's got all the suburbs with data. We can also filter it for the type of property, house, unit, or townhouse. We've filtered for a house. You can also filter for the number of beds. Gee whiz. So we've filtered that for 5 beds. And this is the data that we've come up with. Median price, not just the median price, but the high and the low price, and the number of listings as well. So if you're a seller, it gives you a really good feel for what's happening in the market. If you're a tenant, you know what's happening, because we do exactly the same thing for rents. And you can see there, that's the rental snapshot. So you can understand what's happening for rents if you're a landlord. So it's the absolute what's happening now, and it is in real time. So we update that daily, so you get all the latest data. So it's a handy little app to have on your phone, just to check out what's happening in the market, properties you're interested in, or just generally comparing suburb with suburb. So next week, after a busy week this week, which has gone for a while today, I mean, we have the latest unemployment data, which the Reserve Bank will be looking at with great interest because of its implications for interest rates. Inflation's rising. We need to see, still a solid employment result there. And if we see any sort of weakening there, that sort of works its way into lower interest rates. But if it's stronger with higher inflation, maybe not so good news for the direction of interest rates if you're not looking to see them higher. We're going to have a look for a little bit of something different at the top performing. We've mentioned Queensland today. We're going to have a look at the top performing Southeast Queensland's regions. All right. So we're going to look at the major regions in Southeast Queensland. Of course, we're talking, Toowoomba, Ipswich, Brisbane, Gold Coast, how they're performing. So, and we'll look at rents and prices and yields. So where are the top performers in Brisbane? So it's the Brisbane LGAs. So it's not Brisbane, the capital. So we're going to have a look at the LGAs, Ipswich.
That'll be some fascinating data there, Doc. Getting
it will, and it shows where the strength of those markets are: Moreton Bay, Ipswich, Redland, inner city Brisbane, just how they're performing in a very strong market. We're also going to have a look at the top auction regions and suburbs for June. So what were the top performing for each of the capital suburbs under the hammer in June? And we'll also look at the regions, which are the top clearance rates for which region. So that's some interesting data we're going to produce. And of course, the latest weekend auction results. So it's been a long show today. I hope you've all got lots of information out of it and stuck through it. We've been sort of cutting back our timing, but maybe we had a bit too much data today. But there's a lot of data around, and we've got to present it. And you can always replay it if you couldn't catch up with the show all the way through. So if you want the report here as a slide deck, you can get it there with that QR code, which will give you a PDF copy of what we've said today. But of course, you have the podcast as well as a copy. So that's it from me. Happy midwinter, everybody. Let's look forward to perhaps less rain in Melbourne and less wind in Queensland. But it's just what it is over winter. And so I guess you just got to keep warm the best way you can. And that's what I'm doing at the moment.
A little bit chilly here.
Yes. So it's
10 degrees.
Yeah, I know. But the sun is shining, and that's all good as well. All right, we'll catch you next week. Good to chat, and it'll be interesting to see what those latest unemployment numbers tell us. And it certainly will have some implications for the next interest rate decision from the RBA.
Fantastic. Awesome. Well, thanks again, Doc. Really appreciate all your insights there. And everyone else watching it at home, appreciate you guys. And hope you guys got some valuable information out of it. And we'll look forward to seeing you all next week.
Good on you. Bye now.